这个就是备场的时候用的这个画面。现在已经有了。
没有吗？我看不到备场画面。
好了，
好吧，备场，我看的还是这个。
对吗？你要给那个 Larry。
那他们怎么发？你看这个镜头，行吗？你可以再发新链接吗？喂，你可以再发新链接吗？
可以啊。
好，他们看你，看你，看你。
看见了，那就准备开始吧。
Mute, mute. So you can
Where's the mute, sir?
Change to open.
change to open. And you can ask some question. Okay. Welcome everybody, right? If you can hear me, just
Choose
type
open.
one.
Open. This one is mute.
Yeah, first page. This is first page. You can talk to us, talk to us. We just prepare that video.
Okay, but
Okay, so client cannot see it. Okay, it's okay, yeah. So right now, when you start, you can ask the client. If you can hear me, you can type one.
all right.
Tell you, right? Interaction with the client. Okay, you can start right now.
Oh wait, before wait. Where's my introduce myself? So wait, first here. It's one.
Okay, start open. From open start.
Open.
Open, yeah. Right now, you can talk to us, talk to anyone. After that, you start introduce you, choose the second. No, just sit here.
Okay. Okay. Hi. Good afternoon, traders. How are you? All right. So my name is Noriel. Let's call me Yel. All right. So I want to introduce myself. So, all right. Okay. So here, can you? By the way, can you hear me? Kindly type number one. Can you type number one, traders? Okay, very good. Okay, so yeah, my name is Noriel Ortega. Just call me Coach Shell. Yeah. So I've been in financial industry in almost 15 years as a financial asset trader, coach, trading floor manager, and trader mentor. Okay. So right now, so I'll be introduced to you the forex. What is a forex trader? Forex market. Okay. All right. Okay. So first of all, I will. Okay. So just for this one for the educational purposes. So for disclaimer only. Okay. So I'm not a financial advisor, and the information provided here is for educational and informational purposes only. So trading financial market involves risk. It may not be suitable for everyone. Please consult with a qualified financial professionals and conduct your own research before making any trading decision. Past performance is not indicative of future results, and there are no guarantees of profit in trading. You are solely responsible for your trading decision, and I disclaim any liability for any losses or damages that may result from your action in the financial market. Okay. All right. So Trading Academy Forex 101 introducing introduction to Forex trading. Okay. So our contents for today is the introduction to Forex trading. What is Forex trading? Trading terminology used in Forex. How to buy and sell Forex. Okay. Are you excited, traders? How are you? Are you good? Are you good, traders? Okay. So first I wanted to know. Okay. So why are you here? Why why do you want to learn about Forex? Just give me um just give me your goal before we start on the to discuss the Forex trading. Okay. Why are you here? Why do you want to learn about Forex trading? Okay. So I know you have an idea. So you want money, right? You want bucks, you want a lot of money, you want an extra source of income, right? Okay, first of all, before we proceed, so the goal is to learn about forex trading. Okay, so this is not this is not easy to get. Okay, you need to learn first to educate yourself. All right. Hi, Sik. Hi, Sir Kim. Yeah, yeah, yes, yes, sir, Tom. Much money, right? Okay, so let me start. Okay, so yeah, okay. So first, so the introduction to forex trading is of course that lays the foundation of learning how the foreign exchange market works. Okay, I know you have an idea what is a foreign exchange markets. Okay, forex trading is one of the most exciting ways to anyone speculate to the currency market. Okay, so it is one of the many ways an investors can trade the financial markets. Other common ways to invest include stocks trading or investing in the share market. But there is a difference between how the forex and the stock markets works. When you buy a stock, you are investing in the company, and it titles to one share of the company. Okay, so unlike the stock markets, the trade one of the exchange, the forex markets are not centralized. It is known as trading over the counter or OTC. Okay, all right. Okay, the forex or FX market are open 24 hours, 5 days a week, except the cryptocurrencies. The cryptocurrencies is a 24/7. Saturday, Sunday is still alive, but the forex market until on Friday, Monday to Friday only. Okay, for your informations, additional informations. Okay, all right. Okay, using the trading strategies, you can make money when you buy or sell the respective currencies. The currency exchange markets are the most dynamic markets in the world. This is because unlike the stocks, the forex market is one of the biggest and most active market in the world. Okay, yeah, the forex market is the most active. Okay, so because every day there are opportunities on the market, buy low, sell high on the market, earning a lot of money. So as long as you have a knowledge and skills how to trade the market, you get more money on the forex market. All right. Okay, those traders from any part of the world can easily gain access to this market in the forex trading course. We will start with the basic of the forex market. By the way, ladies and gentlemen, the forex market is hassle free. So all you want to do is you have is internet access, your own laptop or a mobile phone. So you can trade in anywhere in the world. Okay, as long as you have internet access. Okay. Okay. So let's proceed next. Okay. What is a forex trading? Okay. So Forex trading involves buying and selling of two currencies simultaneously. As a trader, your goal is to speculate on the direction of the prices. What is the unique about the forex market? It's the instruments are traded as pairs. For example, when you buy euro and USD, you are buying the euro and selling the US dollar. You would buy the euro USD when you think that the euro exchange rate against the dollar will rise. So this means that the euro appreciates against the dollar. Conversely, the dollar depreciates against the euro. Okay? The amount by which this value changes will determine whether you made a profit or loss. Okay. So difference between spot foreign exchange and a forex trading. When you trade forex, you are only speculating on the currency market movement. You do not get delivery of the other currencies. This is the biggest difference between exchanging forex at an airport, although the terminology may remain the same. Okay. All right. Thank you, Sir Gao. Thank you, Sir John. All right. Thank you. If you have a question, just put on the message. Okay. All right. Okay. So take the example of an airport converting your New Zealand dollars for Australian dollars. You are in effect selling the NZD and buying the AUD. Thus you are the part with your NCD and you get AUD or Australian dollar in return when you are forex trading or currency trading. You don't get the delivery of the other currency, but any profit or losses make it then converted back to your base currencies. Okay, this derivative financial instrument which allows you to speculate on the price, CFDs or contract for difference, allows you to buy and sell currencies without owning the underlying asset. All right. Okay. Forex trading is trading on this currencies, CFDs known as contract for difference. If you don't know what is a CFDs, okay. So number 3. So trading terminology used in a forex. So once you start learning about forex, you need to remember about the jargons and terminology about the forex trading, because there's some words that don't know, because it's called the business of forex trading. Yeah. Okay. As a forex trader, you will come across quite a bit of trading jargon. As with any profession that is own language, it's the same in forex markets too. If you want to trade forex, it is important that you have a good understanding of these terms. There are many terms that you use in currency trading, but it can get too overwhelming. Below is a list, some are common to help you get started. Okay. Forex broker is an intermediary through which you can open trading account. Forex broker provide their services allowing you to speculate the currency markets. Investors or speculation open an account with forex brokerage of their choice. You will need to open trading account with your forex broker to buy or sell. Okay. Sir Tom, yeah, I will prove the next time my PowerPoint presentation. Okay. I think the text is too small, but next time I will prove my presentation. Okay. Thank you for feedback. Okay. Forex broker make money by charging a mark up on the spread of charging a commission on your traders. So this is the sample. As you can see, this is the sample of the major currency or tradable asset on the MT4, MT5, which is the Euro USD, USD JPY, Gold, GBP JPY, USD CHF, GBP USD, etc. Okay, I know you have a favorite currency there, so I know you have a plan what currency do you trade in the market, right? Okay. So, can I ask, do you have an experience on how to trade in forex trading? Anyone? And anyone in this room? Anyone? Do you have any at least you know how to basic trading about forex? Yeah. Okay. Very good. Yeah. Okay. So golds, Sir Gao. Okay. So forex forex broker is an intermediary through which you can open a trading account, Sir Tom. Okay. Forex broker provides services allowing you to speculate in the currency markets. A forex broker is to give you a information uh, about the asset, anything to give you a platform to give you the information about how to trade in the market. Okay. All right. So majors or major currencies pairs a name given a forex currency that are the most liquid. This currency also come from the G7 countries. Okay, if you don't know what is a G7, it's a group of 7 countries. It's the biggest countries in the world, like US, Europe, Russia, Japan. If you look on your screen, so most of the currencies is international currencies, especially in the US. Okay, all right. So they include the US, Euro, yeah, JPY, GBP, CHF, Australian, and CAD or Canada, the Canadian dollar. Okay, so the major currency pairs are known for their liquidity. They are also have tight spreads compared to their other FX. Okay, cross trades, you can identify a cross currency pair because it does not have USD. An example of cross currency pairs is the Euro GBP, AUD, and ZD. For example, any currency against the euro except USD also qualifies as cross rate. So by the way, for the new traders, for newbie here, okay, this is not recommendable for the new traders because this one is a very volatile market. Okay, this one is for the advanced or expert traders. So you can you just for the meantime, okay, you need to learn further the basic before trade on the other currencies like this, like a Euro GBP and AUD and NZD. That's called as a cross rates. Okay. Okay. So I want to aware what is the aware you guys what are the asset. It's a very volatile market. All right. So okay. So next is the pips. The pips is smallest change in currencies rate. The exchange rate in the forex is denoted in fourth decimal. In the fourth decimal is a pip. So pip is the percentage in point. Okay, if you don't know what is a pips. Okay, so if your euro dollar rate exchange from 1.2000 to 1.2005, that is a 5 pip change. Okay, all right. Hi, thank you, Sir Eric. I guess I believe Sir Eric, you're handsome too. Okay. Okay. So imagine this. If you put a buying position on 1,000 point 1,000 1,200 which is increased to 1.2005, so you have a $5 in standard lot. Okay, so imagine that. Imagine that. So it takes, I believe, it takes for my experience, it takes at least 5 minutes to 3 minutes. It depends on the behavior of the market. Yeah. Okay. So you will know soon. So how do you know what I meant? Okay, on advance, on advance. Okay. Yeah. Okay. In gold is one of the very volatile market, sir. So, but the gold is one of my favorite asset because gold is very exciting market. Yeah. Okay. So, but when it comes to foreign exchange trading, we take it a bit further. So instead of 100 cents, we have 1,000 pips. Okay. So for example, as you can see on my monitor, on your monitor, which is 1,000 pips, so 1,000 cents and one full unit. Okay. So leverage is a forex trading is a number expressed as a ratio. It's a multiple by which you can trade as a trader. It's important that you have a good understanding of leverage and margin. A leverage of one is to 100 means that for every $1 you put, you can trade 100 times the amount. This is nothing but $1 if you buy Euro USD as 1.2000 and the price moves to 1.2001, then your profit would be $100. All right, imagine that. Imagine that. Okay, all right. So at the same, if the price moves to 1.199, then your loss would be $100. Okay. So don't worry. Don't worry. I will teach you soon how to protect and how to use the risk management about this. Okay? Don't worry. So don't be scared. Don't be scared. Okay? So I'm here to teach you to avoid the loss. All right? Leverage allows you to magnify the PIP movements in the forex market. Using leverage, you can make a significant profit or loss. You can avoid leverage entirely, but it would mean that you would need to have trading capital of at least $100, $100,000. Right? So because that is the recommendable capital if you want to trade. But if you want to test the market, if you want to try first, okay, so you can do a small amount. But my recommendation is go to the bigger capital because the same effort you want in small capital, the same effort on the bigger capital. Okay. Okay, margin is the amount. Okay, margin, this is the amount you need to put upfront when you're using leverage. A margin amount, as the same suggests, is a percentage of the total amount required. Enter a trade. Margin is a leverage. Go hand in hand. Okay, so the next is spread. A spread is the difference between the bid and ask price in the currency pair. A spread will never be zero. Okay, so it is the price at which you can buy or sell currency pair. For trading, a bid price is the price at which you will sell, and the ask price is the price at which you will buy. Okay, so if you can see this, okay, this kind of currency. So I know my apologies, small text. So if you can see this, which are bid and ask, which are difference with bid and ask is the spread. Okay, if you look in a forex, if you look for a broker, look for a small spread. That is advisable. Okay, so small spread, and of course, license. Okay, license and full regulatory license. Okay, so I will teach you soon about that. Okay, so rollover is the fees charged on your overnight forex position. It has interest calculated on a daily basis and the total amount that you have open the moment. The rollover is added subtracted to your trading position. Forex also refer to rollover as overnight swap rates. So for the newbies or for the new traders, if you, and also for the traders who trade the forex, as you can see, if you put a position overnight, then look at your terminal and you can see the swap on your, there's a positive swap, but most of the time is a negative because once you overnight your position, there's a charges every broker. This is this one is regulated most of the broker. All right. Okay, so don't be shocked what happened. Do you have a negative? So just a small amount. It depends. It depends on your position, how much volume or lots on your position. By the way, so I know some of you don't know what is a volume or lot, so I will teach you soon what's a volume or lot. So right now, I will give you the basic information on the forex trading. All right. Okay. So yeah, there you go. Here. All right. Commissions are the fees that a forex broker charges. This is for every time you open and close the trade. Brokers calculate commission standard lot of 100,000 units of the currency pair. Okay. 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 So one of the exciting is how to buy and sell. How can I make money from forex? Yeah. So these are goals. How can I make the forex? So by now you should know that forex trading, the CFDs on the currency, this is also called retail forex trading. So we are the retail forex tradings. We are the small players. So who is the big players? The banks. The banks is the big players. So not the commercial banks, the biggest bank. One is that is the Lehman Brothers, JP Morgans. Those are the bigger banks. We are the retail players. So okay, so if the big banks, what is the their decision? So we need to follow them because we are the small fish because they are the big fish. So we need to follow them to catch all the pips or money. So we need to follow or chase what are the what are the recommendation of the big banks. Okay. Okay, the banks are the biggest participants of the forex markets. This includes the way from central bank to your high street bank. These participants form the biggest chunk in the money markets. As a forex trader, you do not take part in the markets actively. You only speculate on the direction or the value of one currency to another. To buy or sell forex, a trader must have trading account with a forex broker to begin with. We have to deposit some money into your trading account. Then you need to choose the leverage and you can start trading. Okay, for the beginners, you need to at least low leverage for the meantime. Okay, so my recommendation is one is to one leverage for the meantime, and then that's the market. Okay, that's the market for you. If capital is small, so just for low leverage for the meantime. All right. Okay. So order types used in the forex. When you are trading the forex market, you will be placing orders with your forex brokerage. So these orders determine what should be done based on the certain criteria. But before we go to in these details, so you should know about some key terms when trading. So going long or short. Any idea what is a long or short? Any idea on this room? Okay. All right. So okay. So long is a buying position, and short is a selling position. Okay. So one of the jargons of the terminology of the forex. All right. You may have come across this term if you have anything trading experience. It refers to the trading position you have in the market. So going long means you have a long position in the market. Going long means you have a bullish on the markets, hence you buy. Okay. Okay. How many Sir Kim, he said, how many positions do you have open per day or week? Okay. For me, as experienced trader, Sir Kim, um, my my open position per day depends on the behavior of the market. So, but my average position per day is 10 lots, full standard lots, and also it depends on the capital of the market. Okay, then my biggest my biggest position in a day is 100 lots or more than 100 volume per day. Okay, so by the way, uh don't do it that because it's just a risky position. So I recommend it for those who have experienced trader or more experienced on the forex market. Okay, but for the meantime, we go to small volume for the meantime because yeah, to avoid losses and adverse in the market. Okay. Okay. So Kim. All right. So as a forex trader, you do not take part in the markets actively. You only speculate on the direction or the value of one currency to another. To buy or sell forex, a trader must have trading account with a forex broker to begin with. Yes, of course, you need account in one of the forex broker, all right? So you will then you have deposit some of money in your trading account. Then you need to choose the leverage, and you can start trading. Okay. Order types used in a forex. When you are trading the forex market, you will be placing orders with your forex brokerage. These orders determine what you should be done based on certain criteria. But before you go into these details, you should know about some key terms when trading. Okay, so this is going long and going short. Okay, so yeah, so going short means it's a short position in the market. Investors are short in the market when they believe they have value the asset, the trading will fall. Going short means selling position. Okay, thank you, Sir Kim. Okay, long and short are synonyms for bullish and bearish. Okay, I know you have familiar on the bullish and bearish. Bullish came from the bull, and bearish came from the bear of the animals. All right, so okay, okay, next. So introduction to trading orders. Okay, so I know some of you know how to placing trades. So I know on some of you know how to execute, how to trade and positioning on the market. Okay, so there are many ways you can buy and sell currencies through trading. Here are the most common types of orders that you will be using. Market order. This is the type of order that allows you buy, sell in the forex market. It can be whatever your current market rate is. If the euro USD is trading 1.2000 and you place a market order, then you order execute at the market price. Okay, so that's a market order. Okay, so once you place that, so exactly instant execute on the market. Okay, so you have a buy or selling position. So it depends on your analysis. It depends your technical analysis. So what position do you have? Okay, so how to make money on the market? Just only just put a buying or selling. So just I give you a tips. So if you see the markets, especially in the higher time frame, looking for a higher trend, my recommendation for the beginners is look for the higher time frame, like a daily, 4 hours. So not I do not recommend for the lower time, especially the 1 minute, 5 minutes, because those time frame is for the experienced trader. Okay, those time frame is risky. Okay, so I recommend for all of you guys is higher time frame, 4 hours daily, weekly, and of course once you place the market, review the monthly. Okay, so we will go there. Okay, we will go there. Okay, pending order. A pending order is different from a market order, as the name suggests. The order remains pending until your price criteria is met. An investor uses a pending order when they have a strategy in mind. If an investor thinks what the value of one currency will rise or fall in relation to other to certain price, they place a pending order at that price. Pending orders are also used to take profit and stop loss your trades. Okay, that's the one of the good thing of the FT4 tools. So we create a pending order. We can modify the position. What are the best price? The best price to get in and out on the market. So for example, the price euro USD is 1.2005. then our pending order is a buy limit at 1.200. So once the price go down to 1.200, that time our buy limit is active. So we can choose the lower price in the market. Okay, Sir Kim said, how if I do a market order, how should I analyze the market? Okay, Sir Kim, I will answer that on the next session because that one is for uh, intermediate advanced. Okay, so for the beneficiary of the newbie, so just focus for the meantime on the beginners. Okay, my apologies, Sir Kim. So I hope you understand. I know you have advanced thinking knowledge right now. By the way, I will drop my email on the message. Then you can chat me. You can message me if you have any questions. Just leave me a message. Then I will go and then I will personally reply on your email. All right? Okay, that's fine. Okay. Okay, take profit. Oh, okay, the most exciting one. Okay, this is the most exciting one. Take profit means the profits that which you will take your profit from the forex trading. It is a price at which a pending order is in place. When price reaches your take profit level, the pending order triggers the trade automatically close. When your price hits your take profit, you will of course make money on your trade. Yeah. Okay. So yeah. So take profit also you can modify on your trading account. Okay. You can put how much target you want. For example, I need $500 today, so I want at least how many pips? So 500 pips. So you need 500 pips to get that kind of money. All right. So by the way, so I will give you um, uh, educate what are the strategy to get that. So okay, for on the next session. All right. Okay, so there are three main session, which is the New York or US market, US session, Asia or Tokyo session, or Europe or London session. Okay, first, I know some of you have an idea what are the most volatile market on this session. Of course, the US market. Most active trading time is the US market because most of the time the economic calendar released on the US session. By the way, I will teach you and I will give you what I mean on the economic data. I will give you soon. All right. So just give you information. So for me as a beginner, my advice is trade on Asia, trade on Tokyo session because this is a conservative movement. Just arranging or consolidating movement on the Asia. But be careful. Sometimes the Asia market is very volatile. If there's a current events we will not know. So just keep on updating on the news. It's if you watch the Bloomberg, CNBC, or anything about world. So just keep you update what happening on the market. Okay. Okay, so the biggest trading hubs around the world is the London. It's the largest financial center. When it comes to the world of money, it is the largest FX financial hub. This is followed by New York and Hong Kong. These are three geographical locations dominate the world of currencies. All right. So interest rates move the financial markets. If you have traded stocks, then excuse me, then you would know that companies' fundamentals are important. They play a role determining the value of the share price. With currencies in different interest rates play an important role. The interest rates are set by central banks based on the micro and macroeconomic data. Currency traders follow the financial news to determine what are the future interest rates will be. A currency with a higher interest rate is attractive than one with a lower interest rate. This is the yield that you will hear about the markets. Okay, so there are significant increase in the currency markets. So every financial asset has its own risk involved. Forex is no different. But the important point to note is that this type of the market can be very volatile. Like I said earlier, so you may have experienced the trading other markets, but you should aware to the risk when you trade currencies. By the way, soon I will teach you how to use the risk management to protect your account. All right. So you may have experience trading other markets, but you should be aware the risk when you trade currencies. Many brokers allow you to open a mini or demo account. Okay, you can use this account to get familiar with the trading currencies because of the high risk. Trading must have a clear strategy on how they want to change. This means that traders you should be able to understand the financial news. A trader must also know the basic fundamental and technical analysis to trade. Okay, for like I said, so for those newbie or the beginners, so my advice is more practice on a demo account, just a paper trading, or just look for that. Then familiarize first the platform, the navigations, so you can execute quickly. Okay, then familiarize what are your favorite asset you trade on the market. Okay, so the like I said, so a trader must also basic or fundamental technical analysis to trade. So this one is I will teach you soon how what is the fundamentals and technical analysis, because this one's for in-depth education. So I want you to fresh your mind right now. What is the forex market? So for the meantime, okay, for the meantime, so yeah. By the way, do you have any questions? Any questions? So if you have none for the meantime, I will leave my email here, so you can email. Then I will give you an answers. All right. Yes, sir, Kim. I will give just email. So yeah. Okay, I put my email here. All right, so you can email me oriel.ortega@metacapital.com. So just call me Coach Yel or Mentor Yel for short. All right, so I will answer your question. Okay, so any questions? None? All right. Okay, so bye for now, and thank you, traders. May the pips be with you. Ciao. Okay.
Good.
Good.